Kia ora, and welcome to the CoreLogic Property Market Update for Mahuru, Ruamanu, Ruatakau Mātahi. It's over a month since we went back into lockdown, and once again the property market is showing signs of resilience, with all eyes turning to what happens to the market as the social restrictions continue to loosen. Prior to lockdown, the momentum in the market had continued to slow, and the stalling of market activity due to level FAR restrictions has amplified that pre-existing trend towards fewer sales and a progressively slower rate of capital gain. At the end of Here Turi Koka, quarterly value growth had slowed to 5.2%, which is of course still a relatively high rate of growth, but it is down on the recent peak of 8.1% at the end of Paenga Whawha. Of most interest from the regional house price index results for Here Turi Koka, with a few areas to see value change drift into the negatives. Values in Rotorua fell by 2.8% over the last 3 months, while in Kirikiriroa, values had dropped 0.5% over the same period. For Rotorua, the prolonged period of growth, with values increasing by almost 50% in the last toru years, and most of that in the last year, appears to now be taking its toll. Sales volumes in the Sulphur City have been trending down since the end of Ruamanu to Kaumaiwa, as affordability has started to deteriorate, much like it has around the rest of the country. The house price to income ratio in Rotorua has grown from 5.0 at the end of Ruamanu to Kaumaiwa to 6.5 at the end of Piperi this year, a toru tekau % increase in just tekau mā waru months. Meanwhile, the strength in value growth momentum appears to be holding firm in Tamaki Makaurau, with the quarterly rate of growth lifting to 5.7% at the end of Here Turi Koka, from 5.0% at the end of Hongongai. With the lengthier lockdown in Tamaki Makaurau, Mahuru sales may be more restrained in our largest city. However, the other side of the equation is the loss of, or delay in properties being listed for sale. This may lead to some temporary price pressure in the short term, once the tighter social restrictions end, as pent-up demand meets limited supply. Longer term though, comparisons to last year's lockdown and subsequent housing market boom are limited. Business and employee support was swift this time, but the other stimulatory factors aren't present this time around. The quantitative easing program, which reduced interest rates, alongside the emergency whitu tekau mā rima basis point drop of the official cash rate, has ended, and mortgage interest rates are already on their way up. Furthermore, the OCR itself is likely to be increased at the next review by Te Pūtea Matua. Last year, we also saw the loan-to-value ratio restrictions temporarily removed, as well as the introduction of the mortgage deferral program. Both factors which helped protect the system, but also led to accelerated growth in our largest asset class. In absence of these market stimulants, we don't expect to see the same growth in the property market that occurred over the last tekau mā rima months. In fact, with affordability further stretched, now taking an average of 10.6 years to save a rua tekau % deposit for your first home, up from 8.8 years a year ago, and credit tightening, we expect the rate of growth to continue to slow through the rest of this year and into Ruamanu, Ruatakau mā rua. The year of property politics isn't over yet though, with debt-to-income restrictions at the forefront of Te Pūtea Matua's considerations, as well as the proposed reduction of high LVR lending to first home buyers. On that note, we are also still awaiting the final decisions from the government around what constitutes a new build property, and how long will be classed as new. Those interest deductibility changes are of course due to start phasing in from tahi o whiringa anuku. Never a dull moment then, and a constantly changing environment. To keep on top of it all, and to download our latest biannual housing affordability report, head to corelogic.co.nz. And make sure you subscribe to the New Zealand Property Market Podcast for our weekly digest on everything property related. Mā te wā.